welcome back to Midcap Masala right here on ET Now, and let's put the spotlight on the banking name, that is DCB Bank. The company did come out with a steady quarter four earnings, where the profit has seen a surge of 16% YOY. But what is the outlook going ahead? Let's understand all of that with Mr. Praveen Kutti, who is the MD and CEO of DCB Bank, joining us on the show. Hi, very good morning, Mr. Kutti, and thank you so much for your time. And firstly, let's talk about your advances number, because I see that they have seen a growth of 18% YOY. Firstly, help us understand what drove this sort of a growth and how sustainable is the current mix going forward?
I think we have been demonstrating a growth of somewhere between 18 to 20% consistently over the last 8 quarters. This has been not very easy times, with the headwinds of MFI coming in, multiple issues over the last 2 years, and we have done it, we have demonstrated it, and it's been consistent in terms of growth. So I don't see that number decreasing. Our balance sheet size is small, so growing somewhere between 18-20% is very much in the realms even for the coming future.
Okay, Mr. Kutti, while everything looks good, CASA remains weak despite strong growth. What are the key levers to improve it? Any outlook over here?
So our focus has been on cost of deposit. Q4, you would have seen for the industry as such, the cost of deposit, there's been a war for deposits. We've grown 20.91% in this quarter, YOY, on our total liabilities. And guess what? Our cost of funds have come down by 4 bips. Our cost of deposit has come down by 2 bips. So our entire focus of the bank is to ensure that we have long-term funds available with us. We have small ticket, secular, granular deposit available with us, and to ensure that our cost of deposit goes down. CASA is an element in it. CASA is not the only thing about cost of deposit. So there are multiple items at play to ensure that the cost of deposit goes down without dropping the volumes and without dropping the inherent granularity that the bank craves for. So you would see specifically on the CASA piece, there's a lot of focus on our current account. It's been flat for a long period of time. We have to revive it. There is an opportunity there for the bank. But what pleases me most is that despite such intense competition in Q4 for deposits, the bank has been able to grow 20.91%. Its top 20 ratio is at 6.55%, lower than what we started off the year with. You have the granularity coming in, you have the longer term funds coming in, you have the growth coming in, and most importantly, you are seeing a downward movement in our cost of deposit and cost of funds. And that's a good place to be in. The current account for us is an opportunity for the future, and that will be a big player going forward in driving the cost of deposit even down further.
All right, along with that, Mr. Kutti, let's talk about your NIMs. They have expanded to 3.4%. How much is this growth structural versus cyclical, and are we near the peak margins, or there's a scope to grow even further?
There are 3 components to this. I mentioned about the cost of deposit and cost of funds a few seconds earlier. What I did not mention was our yield. Our yield in Q3 and Q4 were the same, 10.98%. So despite us taking the full impact of 25 basis points cut in repo rate during Q4, our yield and advances remained static at 10.98. This, coupled with the lower cost of funds, which I explained to you some time earlier, has helped the bank. But what really helped the bank is the quality of performance. Our recoveries has been 109% of our fresh slippage. Our asset quality has improved very well, and that has had a salutary effect on the NIM as well. Is there an element of cyclicality to it? Yes, there is an element of cyclicality to it. The way I would request people to look at this is compare ourselves Q4 to Q4, and that would be a better indication of what the future can emerge than compare Q4 with Q3. But all in all, you can ask for more. Yield constant despite a repo rate cut, cost of deposit going down, your portfolio quality coming up, and all these have a salutary effect on the NIM as well.
Okay, understood. So that's on NIMS. Mr. Kutti, your slippages have improved to 2.3%. What has driven this, and is it sustainable across segments going ahead as well?
The slippages have come down, and that's really giving us hope for the future. I'm very happy with our GNPA being less than 2.5%, our net NPA being less than 1%. We are at 0.89. Both are the lowest in the last 7 years, not quarters, 7 years. That's of the past. Why I'm optimistic for the future is our slippage ratio has come down from 3.09 to 2.28, and that is about the future. So there is better underwriting quality coming through. We have increased the ticket size of our loans pretty much earlier, about 1.5 years earlier, and you're seeing the benefit of that coming through in terms of the slippages and the early delinquencies. And I'm very sanguine about the future from this particular perspective.
All right, and lastly, the recoveries that we have seen this time, they were strong. Help us understand what were the key contributors, and is there a further upside, or is this normalization?
I would tend to think that there has been a mind shift change in the bank. We had a first ever investor day in September, and then I made a public statement that the bank has moved away from an NPA management to a 1 day past due mode. So the entire collection mindset has shifted from preventing a 90 days past due movement to a 1 day past due. We're far away from that, but you can already see the culture change happening and taking effect in the grassroots. If you talk to any collection executive in our bank, no one talks about 90 DPD anymore. Everybody talks about 1 DPD. So there's been a complete shift in our intensity, in our outlook, in terms of how to manage delinquent customers, and that has started bearing roots. We haven't seen the full story yet.
Okay, on that note, we'll let you go, Mr. Kutti. So good to be having you on the show, and congratulations on a very inline set of numbers that the company has reported. Good luck for the quarters to come.